Today, the definition of money is quite complicated. Is it what my bank statement says? Is it what's in my crypto wallet? Underbanked is you or me who's in the banking system, not leveraging the full services available to us that the banks will provide. Not once has a bank sat with me and said, I want to know your life plan. And we have a set of services or products that will enable that plan to accelerate, to happen faster. It's going to be effectively a data house where fintechs are plugging in and providing services, and the bank is sweating all that data, doing all the analytics in order to provide you, Ibrahim, with the best possible solutions available in the market, but it's not necessarily provided by them. So you end up spending 15-20% of your bank's annual budget on maintaining a archaic, irrelevant IT architecture.
Kareem.
Hello.
Hello, welcome to the show. Welcome to
Thank
Below
you.
the Fold. How are you?
I'm very well. How are you doing?
I'm very good. How's your evening doing?
Good so far.
Yeah.
Yeah, some interesting conversations.
I'm happy. They were a little bit late to set this up, so we were able to reminisce on some Greek culture and fun facts. Great. I think we owe it to our listeners. Maybe we give them a little bit of an introduction about yourself.
Sure.
Yeah.
Yeah, no problem at all. So, what would you like me to share with everybody?
I mean, you have so much to share. I would start with maybe tell us a little bit about your career, maybe very quickly, who you are. Who is Kareem Monem?
It's a complex question to answer, in all honesty, because I don't know who I am. So
maybe let's start with who is Kareem Monem from Monday to Friday, from 9 to 5.
From Monday to Friday? Okay, fine. Well, why don't I take us back to how I became Kareem Monem, Monday to Friday, 9 to 5.
Yeah.
And that kind of journey through, because, in terms of the entry into the kind of digital technology world for me, actually started with the conversation we were just having with when I moved to Greece.
Okay.
Right. And I worked for a European Union funded NGO that developed assistive technology for people with disabilities.
All right.
Yeah, in Athens, working with people who were visually impaired. They had hearing impairment as well, physical impairments, and I'm sitting in offices with 40, 50 people of a complete range of physical and mental abilities.
Wow.
And developing technology for these people, where it was funded by European Union as well as Microsoft and other companies who were investing in these mega projects that they were developing.
Right.
And I had zero background in technology at this stage.
Oh, that was your first
That was the first
interaction
thing.
with
Correct.
tech.
Yeah.
Okay.
And more, let's call it end user empowerment when it comes to the use of technology.
Yeah.
And so that took me down the road towards where I am, in a sense, today.
Okay.
And so I spent a good year and a half there in Greece, in Athens, working in this organization.
Yeah.
Flew around Europe, raised funds through the likes of Fiat in Italy, Vodafone Spain, Vodafone UK. I presented to all the European members of Parliament in Brussels as well, on different programs that were being developed at the time by us.
So you worked in deep tech, basically?
Listen, you can call it deep tech.
Yeah.
The organization was doing deep tech, both physical, like hardware, as well as software development. But the use case scenarios were how we enable the lives of people who historically would have had barriers to access to information, ability to work, and things like this. So it gave me a very different perspective to what technology can do to empower people.
Wow, okay.
And I was very fortunate because of the links with Microsoft, who were heavily vested. It moved me back to the UK to work for another, actually it was a charity, but charity doesn't mean a free small little shop. This was a 300-400 person charity in the Microsoft head offices in the UK, in Thames Valley. And it was co-funded 80% Microsoft, 20% by IBM, of all people. Okay. Again, building assistive solutions for corporates around the world, including Microsoft. So I worked on the very first Microsoft Surface table that was launched in 2009, I think it was.
Oh, wow.
Yeah.
Okay.
So we were testing out of Seattle.
Which made a lot of noise too.
Yes.
Yeah.
Yeah. I mean, this was the one where, I don't know if you recall.
Congratulations, I suppose.
I was like a small cog in a very, very big engine of.
Yeah.
But a lot of the testing was done again using people who had physical impairments, disabilities, mental impairments and disabilities as well.
Right.
Everything from minor to major, and was making technology applicable and usable by everybody possible.
Right.
And so from there, I moved into more enterprise level technology solutions, still within the Microsoft circle.
Right.
So worked with a systems integrator who developed internal communication platforms on SharePoint.
Okay.
And then that brought me, after some negotiation, brought me out to the Middle East to work with the Publicis group, who at the time had just acquired a Dubai-born and raised digital agency called Flip Media.
Yeah.
Who, for any old school kind of OGs of Dubai, will remember them very, very well.
Okay. At that point, did you have any anything to do with marketing at all, or media planning, or digital advertising, or?
I mean, I always say define marketing.
Yeah. It's a little bit subjective.
I mean, so we were. If you think back to,
for sure,
definitely. I mean, 2012. I'm talking about. The concept of digital was more build a website.
Yeah.
Mobile was just becoming, really starting to edge towards the front of mobile first. Banners. Everybody loved digital banners at the time. And most digital agencies sat under advertising companies to produce just ranges of banners that were being pumped out into different kind of platforms across the the world. So that was primarily what we were doing at Flip when we were acquired by the group. Okay. So Leo Burnett were asking us to do a lot of banner work, and slowly realizing that the future, which wasn't tomorrow, the future was actually now already coming, was demanding complexity. More intense, more intensive adoption of digital solutions to enable businesses to connect faster, quicker, smarter with their consumer, their end user. Because all of us were becoming much more technology savvy.
Right. Yeah. And empowered, of
massively,
course.
Massively. So through all that, sorry, we kind of went off piece there, as usual. But then when I was very fortunate to join Flip at the time, which was under Leo Burnett, under the Publicis group, which it was a very different entity at the time, the group. Right. We soon realized there was a place for us at the top tier rather than the bottom tier.
Right.
We saw Accenture weirdly the market. At the time, Digitas LBI was in the market as well, which weirdly enough was a competitor, even though now I work for the Digitas brand as a friend of a close friend of the group's, obviously. The group had just announced they were acquiring Sapient, Sapient Nitro, which was one of the sexiest brands there was around at the time.
I mean, I remember it made a lot of buzz when it first was announced.
Big time.
Yeah.
So we made a big play. We were able to convince Sapient to come to the Middle East. It took us a good 18 months to convince them.
Right.
And then incredibly fortunate because supported at the time with the legend Rajat Rad, the previous president of the group, obviously Basil Kakish, who's now the CEO and everything. I mean, these guys were deep involved in that enablement at the time.
Yeah.
And working with the likes of Nigel Vass, who's now the Sapient CEO, the Holy Sapient CEO, Srini Devalopalli, who's now the MD for the region here for Sapient. So all these people at the time were part of this startup community of, we want to do big digital work.
Yeah.
So we're going to go crazy and we're going to aim for the stars and just hope that we don't come up with a handful of mud, as the famous saying goes. So so I've been very fortunate to be part of those journeys all the way through.
Right.
I was lucky to lead Sapient.
And today you are the CEO of Digitas.
Correct.
A full suite marketing agency, right?
Yes.
Or I'd love you to give me a better description.
So Digitas is a very interesting organization from both a global and local level.
Yeah.
Each flavor of Digitas is like Baskin Robbins. It's ice cream, but it's different flavors of ice cream across the world. So some are more media led, some are more, let's say, technology or digital experience led. Some are a little bit more consulting. some blend it all together.
Yeah.
So when I rejoined the group back in actually a year ago, June last year,
Right.
the question was, what is our purpose? What is Digitas Middle East's purpose, and how we're going to create impact that doesn't conflict with the impact being created by other entities within the group?
Right.
Because it's very easy to get confused. The group is a complicated place.
It is.
We have our SI, Sapient, management consulting, big scale enterprise technology solutions. You go then down to, comms, where you've got the likes of Leo Burnett, Saatchi and so on and so on.
Yeah.
Move into media, the Starcoms, the Zeniths,
Performance, Performix.
all of this.
Yeah.
Practices, which is also a kind of internal, external model as well. So all of this. And Digitas was, it was very successful when I joined, previously led by Tony Wazen, and he'd started to create something beyond media, because initially it was very media orientated.
Yeah, and I love when you have the chance to reinvent yourself, right? Go back to the whiteboard and a little bit like you showed me last time when I came by your office. A little bit. That was very interesting.
It's actually
no worries.
It wasn't something necessarily on the wall, please change us to do something else, but it was something we identified very early on. Because when I joined, I had a great set of people within the leadership team. But somebody said in a room once, I feel like we're all part of a football team, all being told to score a goal, but we're not necessarily coordinating on how to score that goal.
Yeah.
And once we score the goal, how do you celebrate that goal? And so what is the purpose of the goal? So we spent a good 5 or 6 months redefining the why.
Right. Yeah.
Why us? Why would you choose us, Mr. or Mrs. Customer?
Yeah.
What are we going to do for you, and then how are we going to do that? So once we defined the why, and we realized there was a very powerful place which sat in between everything the group does, and not just within the group, what the market was screaming for.
Yeah.
And it went all the way back to the origins of what Digitas stands for. So Digitas is 2 words. It's digital and veritas, which is Latin for truth. Mm-hmm. So it's digital truth.
Right.
Okay. So when you just sit there and realize you're representing a brand which is saying, we want to tell you, again, Mr. and Mrs. Customer, the truth about the performance of campaign X, platform Y, app C, whatever those things are, and how do we ensure that marketing is seen as an ecosystem that works in harmony together, rather than I own this, you own that, we own this, you own that, and our one metric is how do we get more customers? That's it. Which could be a very successful measurement, but nobody thinks about the cost of that customer. Nobody thinks about how long are we going to keep that customer. Nobody thinks about what is our competitor doing in order to take that customer away from us.
This is an incredible point, by the way. Oversight, when you don't have access to the right data, right, and you're only looking at your own historical data, right? You don't have visibility over the entire customer behavior, right, and or dynamics. And I honestly, I would love to sit and talk to you about your vision for Digitas, which is very exciting, to be honest. And also, we don't want to reveal all the
magic sauce,
the magic sauce, the
secret sauce,
the magic potion. We say sauce in the Middle East, right? But today we're here to talk about the future of money.
Yep.
Right, and money and the future of money, and hopefully we'll be able to pull this out in 1 hour. Maybe we need more. Let's see how it goes.
Okay.
Should we start with maybe? I know that you told me previously that you wanted to first let's define money, because what is money, right? What's the perception of money with people, right? Do you want to have a go at that?
Are you marking me on my answer?
Not at all. No, you could literally answer anything.
So no, I think it's a good bench. It's always good to start with a common understanding of what money, because today the definition of money is quite complicated. Is it what's physically in my pocket? Is it what my bank statement says? Is it what's in my my crypto wallet? Is it what's in my Kareem Pay or Apple Pay or whatever else? I mean, the definition today of money is an arbitrary measurement of wealth in a weird way. But if you go back, I mean, at the end of the day, money has probably 2 to 3 meanings. Okay, so it's a medium of value exchange. Okay, so I know I can buy a service or product from somebody based on an agreed price. Okay, and that's whether that's physical, digital, however we do that exchange. It's between you and me to agree, but there's a value that we're actually I'm agreeing to pay for that. It's also a store of value. So how do I measure my net worth or net value, which can be released at any time, liquidated in order for me to pay for your service or your good? Or I may want to just say one day, hey, look at this, I've accumulated wealth of, $10, $1 million, $1 billion, and again, it's a show of something.
Right.
And then it's also understanding the forms that it comes in.
Yeah.
Because if you think about the different forms, as I was saying, it goes everything from coins, notes, to what's on a little screen when you go to the ATM, when I log into my wallet, and all of these. So
when you say the equivalent of your net worth, I mean, that could be your house, right? That could be a fixed asset.
100%.
Yeah.
I mean, there is no way today of defining. Well, there is ways of defining it. There's traditional ways, and there's what's the future we're moving towards. Yeah. And the day may come with the decentralization of these systems that the definition of my wealth today can be obliterated in the future. And I will not have the same net worth in the future. Or it could turn on its head and I could have a net worth 10 times what I am today.
What do you mean decentralization of systems? Can you elaborate on that?
So this is now getting into the deep dark world of whether that's crypto and blockchain, and how on a theoretical level, how financial systems which have controlled the mechanism of value are now realizing there's pressure coming from outside of that traditional system. And saying, I want to agree with you, Ibrahim, what is the value of our exchange? Rather than what is the bank's value of our exchange. I want to take things away from the norm and heavily rely on technology solutions
such as
blockchain, crypto. Everything is moving towards a pure play digital economy. There's no argument about that. And the battle is between, some will say good and evil. Central banks.
I was just gonna say, is this the bank's response to decentralization?
Well, it's not the bank. This is the communities.
The central bank digital currencies, or otherwise CBDCs.
CBDCs. So no, that's slightly different. So CBDCs, a central bank digital currency, is in answer to a decentralized, whether that's Bitcoin, all these other kind of cryptocurrencies that have been created outside of a traditional banking system. And so CBDCs are now there's quite a few around the world that we launched. Even we have the digital, the e-dirham, the digital dirham that's been released by the central bank of the UAE. It's in a trial status right now. I think it's 12 to 15 months worth of testing, POCs, focusing on cross-border payments and how they're going to simplify that and create a more regulated form of digital currencies. And the difference between a central bank's digital currency and a decentralized currency is that the blockchain, one is public, one is private. So the bank
one is decentralized and the other one is
simply centralized. It's as simple as that. And I think we as
consumers,
we're just normal people in the street wanting to make simple transactions. We want to ensure that we are growing our wealth, and we understand how we're growing it. I think one of the biggest challenges today is not many people understand what's actually going on in the financial world, and me being one of them as well. I mean, I have that much knowledge. I have friends who have that much knowledge, but the amount of knowledge we need is equivalent to the size of this studio, if not more. And as technology becomes more accessible, more powerful, and the amount of data and the the algorithms are being created, the way we're analyzing data, the way we're mining is moving at a pace it's almost uncontrollable.
Right.
It's quite scary, actually.
Yeah. And so I can see governments obviously encouraging the adoption of CBDCs, right? And I think I'd love to get your input on that, but I feel like for various reasons, I obviously I would not question if they have the people's interest, right, in encouraging the adoption of CBDCs, but it would provide more control.
Definitely.
It would provide, I guess it would be more beneficial for the economy, right? More fluidity, more liquidity. From a user perspective, from a consumer perspective, obviously the more interoperability there is in how I manage my funds or my money.
Yep.
Right? How I move value, I suppose, right? Ultimately, from what's equivalent of my fixed asset onto perhaps liquid asset. That would be an ideal right scenario.
And there are many fintechs today that are trying to do that, because one of the biggest challenges has been, how do you convert, if you have a cryptocurrency, how do I convert that back into a physical currency that I can use in 99.9% of scenarios?
Yeah.
And there are many platforms that have come out trying to simplify that, because a couple of the points you made there, a central bank digital currency is a regulated form of the centralized currency, where the momentum on the decentralized side is growing very, very fast, because it's a peer-to-peer kind of network, and it's not regulated by any government, any bank. They know what's happening, the momentum is growing, but they cannot get control of it, because that's how the system is designed. It's jumping ahead faster than banks can develop any form of technology themselves.
Yeah.
However, let's bring it back to you and me.
Yeah, exactly.
I don't know. I am still not in the level of trust into that type of decentralized model, where I believe that I would want to put all of my value into that, because I don't know who's actually necessarily running this. Yeah. I don't know who will validate or back. If anything goes wrong, how do I ensure that I'm not going to be bankrupt living on the street?
It hasn't had the best history, if you look at the past decade as well, right? When you look at the volatility as well of decentralized currency.
Yeah, it depends. If you talk to some of the crypto billionaires, they might disagree with you and say it's had a great history. Yeah, I mean, there are multiple people. I mean, you're talking millions of people around the world who have been super successful because of this. So again, my statement is more an statement of ignorance, because unless you are willing to put the effort and time into learning what's really going on, it's much easier to go and take out dollars from the ATM or dirhams from an ATM and just do the traditional way that we've all been taught, because that was in school. I remember having the plastic till and I'm selling oranges and apples and bananas, and you're giving me a plastic coin in return for that.
Right.
How do you translate that learning into schools today if we're moving into a more decentralized world? Yeah. There's a lot of catch up there, and a lot of education and inclusion as well, in terms of accessibility and inclusion.
Right. I mean, you just listed a couple of topics right there in just one sentence, actually, that we could tap into. And I want us to talk more about the future of money.
Okay.
But I feel like you stressed on financial literacy.
Yes.
Right. And do you feel like it is a barrier for the future of money or the growth
So I would say it is a barrier, and not have to link it to growth, the future of money, anything else, because I've worked with the Bank of England in the past. I've worked with the Central Bank of Egypt, CBE. I have a very, very dear friend of mine who works with the Central Bank of the UAE, is actually the chief fintech officer, who's working on CBDC and other kind of initiatives in and around these areas.
Yeah.
And when I relate to my time working with the Central Bank of Egypt, one of the pillars they had was accessibility and inclusion.
Right.
Okay. Which came down to fundamentally the understanding of how to use, how to access, how to distribute your money.
Right.
Yeah. And it's two simple terms. You've got the unbanked and the underbanked. Yeah. And
I love that, the unbanked and the underbanked.
Yeah, I mean,
I never heard of the underbanked before.
Okay, so an underbanked is you or me who's in the banking system, but we're not leveraging the full services available to us that the banks will provide. So there's numerous services banks provide.
Because they're not tailored enough, maybe?
Because they don't communicate them well enough. And there's so many of them that they don't know how to. So what do they push? They push interest rates, savings rates.
Yeah.
A number that catches your attention, that clickbait number.
Right.
Yeah. A loan. Hello, sir. Hello, madam. Would you like a loan? Why? Well, I don't know. I just thought you might like one. That's the calls I have with banks these days.
What's his name, your guy?
Which guy?
Who calls you?
I'm not going to name the banks who.
All right. I also have a guy.
Oh, okay.
Who calls me literally every month to propose, to offer me a personal loan or a home loan every month. And every time I tell him, look, I'm not ready.
Yep.
Maybe in 6 months. But he calls me again a month later.
Because he has sales targets.
He does. But,
he doesn't care about you.
I feel like either they don't have the right information about me, or their offers are not tailored enough. They're not personalized enough to me. Or like you said, they're not really communicating the right value to me.
Well, the other thing is they don't care about you. So I would translate this. I mean, this is a great topic. I'm actually quite passionate about this conversation.
They're not customer-centric enough.
So the failure of, if we talk about retail banking, so when I talk about, you and I as standard customers, okay, not once has a bank sat with me and said, I want to know your life plan. And we have a set of services or products that will enable that plan to accelerate, to happen faster, or that will unlock value for you that's returned to us because you become a customer for whatever number of years, 10, 20, 30, 40, 50. Your family become customers of ours. You trust our advice. You believe in our advice.
Yeah.
And you also understand you're paying for our advice. Because we're led today to think banking is free.
Right.
I open a bank account. I've never paid a penny for my bank account. You get a credit card for free. Thank you so much. Things are thrown at you, and what you don't realize is nothing in this world is for free, especially in banking.
Right. Yeah.
It costs a bank to run a retail account, a standard account, about $100 a month. The infrastructure, the people, everything around it. And unless they're selling me a credit facility, I'm a loss-making customer for them.
Yeah.
So they have to recuperate that loss somehow. And the best way to do it, especially in a country where historically we were, I would call it an acquisition only, because people were here for 2 to 5 years, hit it and quit it, come in, earn as much money as fast as possible and disappear. So banks never needed to build long-term relationships with you.
That's why they front end the offers.
Absolutely. But today, how many people are buying houses? We're here for 10 years, for 20 years, for 30 years. Golden visas changed everything for us.
Right.
We're more committed to the UAE than we are to the countries we have come from in some instances.
Right.
Yeah. So banks are now in catch-up mode to realize, oh my goodness, I have somebody that's going to be here for a long time. I haven't valued the data, the insights they've given me since day one.
Massive headroom.
Yeah. I have to catch up.
Right.
But while I'm catching up, I'm still going to throw numbers at them. Mortgage, 2.2% for the first 6 months. Fixed rate, interest rate, credit cards.
They're being erratic right now.
Of course.
Yeah, it's a good time to be a bank nowadays.
Actually, it's a terrible time to be a bank.
Tell me why.
Because banks are under attack from every possible angle.
Let's talk about that a little bit.
Man, that's
what's the biggest threat to banks nowadays?
Banks are biggest threats to banks.
Well, those that are innovating, perhaps.
Okay, so for all my friends in banking, this is just the Kareem's opinion of the world of banking. But through the last, I've been very fortunate to work in programs where we've built banks from scratch. Okay, And these are neo or digital banks, the kind of, startup banks. And
Would
also
you say
work with
Revolut is a good reference?
I haven't worked with Revolut, but
Right.
it's an example of.
Right,
Okay.
yeah.
But Revolut's, these are all, they start off with the frame, we're a fintech
Yeah.
that will provide banking services, but they were not designed necessarily to be banks from day one.
Okay.
Because there's a famous saying, I think everyone relates it to Bill Gates.
Yeah.
In the future, we won't need banks, but we will need banking services.
Right.
And there's some great white papers in the market right now. So Deloitte wrote about, the bank of 2030 will not be a house where you walk in, and you've got a teller and you have a service here. So it's going to be effectively a data house where fintechs are plugging in and providing services, and the bank is sweating all that data and doing all the analytics in order to provide you, Ibrahim, with the best possible solutions available in the market, but it's not necessarily provided by them. It's provided by their partners who are validated, who are on their core banking system, who can plug and play within seconds, and you're in adopting that. And so they're taking whether that's a commission, a payment, whatever that is, their business model will be turned on its head.
Right. So the bank that is today striking the best kind of partnerships, potentially, what else? Maybe is better at adopting technology as well.
So banks have a horrendous digital debt because a lot of banks have got old core banking systems, and this is where the problems lie.
Yeah.
The previous CEO of Temenos, which is a core banking platform, a gentleman called Max, I can't remember his surname, he calls it the spaghetti syndrome. So 20 years ago, a bank would have invested X number of millions of dollars into a core banking system, which allows you to run the banks, all the services within a bank.
Right.
Every day or 2 days, marketing comes up with a new product or service. The different business units within the bank then have to go away and ideate, how do we make this happen? Then they pass it on to IT that has to then build it into this core banking system. Do that 50 times a year. So you're adding X number of services while decommissioning previous services. And sometimes the bank is moving so fast to keep up with the promises being made, it's not decommissioning things fast enough. So all you're doing is building a bigger bowl of spaghetti until you have no idea what's within that bowl of spaghetti. Yeah. And so you end up spending 15, 20% of your bank's annual budget on maintaining a archaic, irrelevant IT architecture, infrastructure.
Which is definitely going to slow you down too, right?
100%. Because now if you go to a bank, I'm talking legacy banks now, and say, we have an amazing idea. Okay, we want to launch the world's first flexi credit card lifestyle credit card platform, which means a customer can choose 7 lifestyle services relative to what they need, and will have a scaling interest rates depending on how much they spend. If they spend more, the interest rate's lower, but if they spend less, it increases. Example, I mean, there isn't one like this. I'm saying, okay, IT, build it into the system. We need 9 to 12 months. Why? Because we have so many other things that are backlogged.
Yeah.
Okay.
9 to 12 months is not relevant anymore, potentially.
Exactly.
Yeah.
So your relevance becomes zero. So what you find is the reason why these fintechs, these neos start up, when they focus on 1, 2, 3 services, they're able to move at speed.
Right. Yeah.
They're adapting, they're learning, they're experimenting, and they're communicating as an experimenter.
Right.
You know, when you're a brand, you're a challenger brand, people find you exciting. We can get into, there's other things around trust and so on and so on. That's another thing we can get into at another time. But so what banks have found themselves, whilst today they are one of the biggest investors in fintechs around the world, because they realize in order to stay relevant, we have to buy these fintechs for 2 reasons: to learn from them and to get rid of them, because they're a threat.
Right. Look at how telcos also are investing in fintech today.
Of course, but that complements the direction of digital economy.
Yeah.
Go back to the unbanked, okay, or the underbanked. Those 2 terms, very common terms today, and slightly overused in the industry because nobody's ever actually figured out how to reduce the unbanked and underbanked yet.
Yeah.
But the telco infrastructure, okay, enables people to transfer money to each other in the most remote areas. You've just opened up. You've just improved the accessibility to financial services. And a financial service is as simple as me sending you money. That's a financial service.
From a merchant perspective also, that's a very compelling offering.
Absolutely.
Well, right?
Yeah. So in Africa, when you look at what...
M-Pesa?
No, the telco, why has my mind gone blank?
There's Orange, there's Vodafone.
No, it's more...
In which country?
They're they're Pan-Africa. Pan-Africa.
Across Africa.
Yeah.
I know Vodafone is across. So they have a digital wallet.
So no, what they have done. So this telco, the name will come back shortly. Has effectively opened up its infrastructure to allow for the most for people. You know, they can't read or write. They can't count how many fingers are on their hands. But they know how to get paid. And by leveraging SMS banking as an example, because not everyone has access to 5G, 4G, smartphones and all this, SMS banking in itself has completely changed the game. And it's changed the game also for underrepresented communities as well. So I very luckily, a few years ago, I went to Eswatini, which used to be Swaziland, okay, to meet with members of the royal family, to talk about building a digital banking system to allow the likes of women who are one of the biggest contributors to their economy, but do not get paid for the work that they do. So they want to distribute the wealth in a more fair and free manner. And the only way to do that was to create a banking system that allowed them to get paid for their services. So these underrepresented communities, you know, still exist, and not only in Africa, in the most kind of developed worlds as well, it still exists as well. But they're, you know, focusing where we were. So we were in South Africa, went into Eswatini, you know, met some of the most skilled glass makers and artists and people like this, all of whom are working for nothing.
Right.
So why are you working? Well, the money goes to my husband or my family, or so they don't even get to see that money transferring from A to B. They're just doing this job and someone else is getting the benefit. So by unlocking these bubbles of value, your economy naturally starts to grow. And so therefore this infrastructure that was being created allowed the economy to grow through ways that would never have been considered 5 years before.
Right. And also brings in, I think, maybe perhaps use cases that can be applied to more developed countries. Absolutely.
And it is. It is, absolutely. I mean, there are so many use case scenarios. Again, I have worked with, have a very dear friend of mine. He's been involved in social banking. And the concept of a social bank is, again, how you fairly distribute funds coming from the UN Social Fund, for example, that's meant to be contributing to underdeveloped areas. Could be in the US, it could be in the UK, it could be in Germany. That money is going to the right people in the right way. He worked on something which was looking at women that that suffered domestic abuse. Okay, they had to flee from their family, their husband, or whatever else.
Because the law doesn't protect them, I think.
Not the law doesn't protect them. Even if it did protect them, they gave up their wealth, their house, their money. They had they were controlled. Okay, and they went into the wilderness. They went to a refuge to get away, and all of a sudden they have to rely on the government or charitable entities to provide them with clothing, with food, and everything else. The governments have funds for people who are in these distress situations. But how that money is distributed hasn't changed over the last 30, 40 years. They could be waiting 3, 4, 5, 6, 7 weeks to get their hands on that money because they have to recreate an identity.
Incredible.
And so there are scenarios now where there are systems being created to distribute that money as immediately as they're registered. And again, that stimulates economy. I know it doesn't sound like a big step forward, but it creates independence and it also stimulates the economy and allows these women to reestablish who they are, to move on and to get to work towards a better life again.
I never thought about it like that, honestly, but it sounds like I can understand now the urgency also of moving into this future, right? Of money. What else is there for us to cover in the future of money? I feel like I want us to talk a little bit more about maybe potentially we can talk about the region here.
Sure.
And Dubai as well, right? What do you think is the biggest opportunity today for us to develop, for the future of money to develop here in the region? Who's got the biggest role? It's a big
wow.
question.
It's like seriously.
No pressure.
Solving world peace.
We can break it down. We can talk, if you want, a little bit about personalized financial services, because I feel like maybe perhaps the more digitized the society is, the more there's opportunity for personalization, right? The more you have a digital footprint, and the more you transact online,
Absolutely.
the more there's an opportunity for a personalized service. And again, back to this example where our friends call us on every month on a monthly basis, offering a loan, completely irrelevant, completely offsetting as well.
Correct.
Borderline
harassment.
I was gonna use something a little bit more acceptable.
What's more frustrating is when I already have that loan or that credit card and they're calling to sell me the same one again.
Yeah.
I mean,
the same card, not even a different
So
one.
would you like? So I have it already. Yes, but okay.
Yeah.
Would you like something? No. Like.
So maybe we could use a little bit more AI to maybe they're struggling to absorb and utilize all the data available on us for them to personalize their services or their offers or products. This is potentially where AI and automation could play a bigger role. Maybe we need robo advisors.
So a lot of banks are adopting that already. I mean, that's not. I don't think you need more technology for the sake of technology. And remember, who buys technology? Technologists. Like the technology team, the IT team, and so on and so on. As consumers, do you ever choose an institution because of what technology they bought? You don't even know.
No. It's what it represents for you from a consumer interface.
It's the experience. It's the experience. And I think what a lot of companies forget, probably the only remaining differentiator in industry today is experience over anything else. And sometimes the most simplest interactions are the best experiences, not these overcomplicated, super empowered, lots of words, means nothing to me. I'm just going to throw lots of stuff at you. I mean, you talk about AI. I love the conversation. But let me ask you something. What do you mean by AI?
Yeah, maybe what I mean by AI is faster, more accurate, more relevant. Actually, also now that I'm thinking about it, is what's the better value for me, right?
Yeah.
Eventually, how am I going to grow my
your wealth,
massive fortune that I'm sitting on.
I'm sitting in the presence of a billionaire right now. So I'm honored. There's a so you look at to partially answer some of the questions. I think there's lots packed into what we're talking about here. As a financial institution, if you focus on banks today, they are sitting on lakes, oceans of data. And within these oceans, there are gold mines and diamond mines that will unlock value for them and unlock value for me as a selfish consumer.
Right.
Okay. It's not just about providing me a loan when I want to buy a car.
Yeah.
It's about understanding what stages am I in my life, what signals am I giving away, and what am I planning for based on these signals. So I'll give you an example. I have a daughter who's 12 years old. Naturally, I'm thinking about at 18 years old, she's going to want to go to university. Banks never called me to say, we'd like to sit down and discuss how we can help build a education fund for you. Which is, you have three options: low risk, medium risk, high risk, return X, Y, and Z. And we'd like to give you a transparent a platform that allows you to watch and see what's going on within that fund. And as that fund grows, what we can also do is if it grows beyond a certain percentage, we will diversify that away to reduce the risk of loss and put it somewhere else in order to, and they all of a sudden create the conversation with me where they're saying, I know you, I get you, I understand you, because you're not unique, even though you want to feel it. You know, Kareem, we love you, you're the best customer ever. But there's a million Kareems out there who are in exactly the same situation. And the power of what, you know, a proper artificial intelligent, you know, AI core banking system will allow is for them to look at all these consistencies and these commonalities across their customer base.
Yeah.
And look for anomalies to say that is not a target, commonalities to say that is a target, and then everything in the middle to say, how would we form something that's slightly different for this person that's in a slightly different situation.
Right.
Yeah.
And also go to market, right? At once.
Can you imagine? Yeah. I mean, can you imagine? So there's so many use case scenarios for AI today.
Yeah.
That when I sit with clients and they talk AI, my first question is, what do you mean by AI?
Right.
Yeah.
Because it is very broad now.
It's massive. Hundreds of scenarios for AI. I mean, you talk to whether it's the like of, Microsoft, who I've got, very, very deep relationships there and understanding what they're doing within that kind of space. And you just have to look at the likes of Nvidia and what's going on in the stock market with them, and their valuation is, skyrocketing. Yeah. So we know the world is moving towards automation.
Right.
It's moving towards data. The appreciation and the analytics of data and the outcome of that analytics is becoming more and more important. Right. And there's terminology that's now becoming more and more prevalent, which is data fracking. So it's not just about the analytics, it's how do you get between the analytics to understand those little micro moments that actually are leading to the next big moment in time.
Right.
Yeah. And so
the predictive patterns.
Yeah.
I really find it hard not to throw jargon or words, with
it's normal for us, but audience may not. I mean, for anyone listening out there may sit there and go,
I wanna go back to digital wallets.
Sure.
There a few more points or topics that I want to cover, but just to wrap up on digital wallets, who do you think will win the digital wallet race, or who's prone to win?
Who's the competitors?
Because I feel like a lot of companies today are investing in digital wallets. You have the telcos, we said, we have the banks to a certain extent, right? Banks offer peer-to-peer transactions. Yep. Super apps as well, right?
Share loyalty platforms are offering everybody. The funny thing is, to use, which is now currently a mass boycotted brand, but Starbucks, their loyalty app was I could actually store currency on that.
Yeah.
So my used to be go-to coffee shop used to be my bank, because the second I give them money and they're storing money on my behalf, they become a form of a bank, a wallet. Yeah. It's a good question, because when everybody does it, what's the value? Yeah, and that's where I'm back in that question of why bother?
Right.
Yeah, everybody's offering something to use their wallet that they've created. I have Kareem Pay, you have
STC Pay,
STC Pay, and we have lots, and there's some great ones out there. Please, this is not I'm saying that market is flawed, not at all. It's just everybody's jumping on a bandwagon of let's have that money now. Let me connect this slightly differently, because one thing we haven't really touched on is the value of blockchain in this, and this is also the kind of centralized decentralized conversation, and wallets are a great place to look at this.
So security, right?
Security is one thing, but it's the mechanism. So I'm talking more about the mechanism. So if
speed of transaction.
Well,
sorry, I'm interrupting you.
No. It's simply more. Okay, so today in the wallet. So let's say I'm using the Ibrahim wallet.
Yeah.
Okay. I have 10 dirhams in my wallet. Okay, and I buy a service from you for 10. Okay. So plus 10 minus 10, the transaction happens.
Right.
Yeah. Who knows about that transaction?
Right.
Only the platform itself. It's not recorded with the bank. It's not recorded with the central bank. Nobody really gives a damn about 10 dirham transaction.
Yeah.
And that's between you and me. Yeah.
Right.
And it's using a currency that's been defined by whichever platform we decided to use. That's how it is.
But today, a lot of digital wallets, when you open an account, it opens a bank account in the back end.
Which ones are you
So
talking about?
STC Pay.
Yeah.
One. You have Visa Pay.
Yes.
As well. And I think so, but you do have plenty of wallets that don't use banks.
They don't need to. You don't need to any longer. As long as you're not providing credit services, then you don't need to apply for a banking license.
Right.
Yeah. There are still regulations that you have to be adhering to and applying for before you can do this type of service. And more where I was going with this, where the central bank digital currencies that are coming into play and so on and so on. Soon what the banks want to do is say, we will underwrite that payment. We will record that transaction between, Mr. and Mrs. A and Mr. and Mrs. B, which historically nobody really cared about. We want to record that, and we want you to use our currency, which is underwritten, which is protected, which is regulated, to make that transaction. So use our regulated wallet.
Right.
That's a very powerful message to deliver to people.
Right.
Yeah. And this is where also when you look at the power of blockchain, and blockchains, again, it's quite complicated. It's not simple, but the best way to describe it, it's an end-to-end way of looking at a payment or transaction that is secure, that is transparent, you cannot ever falsify information on chain.
Yeah.
Yeah. And
you cannot change it.
You cannot change it unless everybody agrees to change it. There's that kind of 7 stages of development on the chain.
Yeah.
But the idea will be that through the adoption of blockchain, that we are protecting everybody along that value line.
Right.
Yeah. And you therefore start to defeat the idea of risk.
Right.
As it goes back to security and risk, which is, it's my money. Now, I've worked so hard to earn that, to give my family a future, my children a future. And as the values start to increase of how we're starting to transfer money between each other, I want security of that money. Right. I want to know I'm not one day wake up and the system has crashed and nobody knows how to unlock it because the passwords are lost, or somebody's hacked here and there, or this, we have a bad actor that's broken into there. So the adoption of blockchain at core
could help set the digital wallet apart, right?
It absolutely could do, in my opinion.
And the experience as well.
Of course.
I think also the interoperability, I've used this word so many times today, overly used, will help. And like you said, today this is a healthy competition that's happening. Different players using digital wallets. Obviously, there's a lot of headroom for everyone to grow, right? But from a government perspective, I suppose, as long as they follow the rules, right? They're happy that everyone's getting into digital wallets.
Of course they are.
Yeah.
Listen, the economy is becoming digital as we move, especially, when you talk about the government's role and you look at the CBDCs as well, it's enabling a more controlled transition from a cash society to a cashless society. We're helping facilitate that transition in a regulated, calm fashion.
Yeah, and it's helping use cases I've never thought of, like the ones that you've mentioned earlier, and in Africa, for example, and also rural areas as well. It's very interesting. Let's talk about financial inclusion.
Okay.
Right. So you also spoke about this a little bit in Africa. Do we still suffer from this here, from financial exclusion in the region? Have you got any insight about that?
Yeah, look, again, if I go back to the experience working with the Central Bank of Egypt, financial exclusion. Yeah, let's just be clear, because I sound like I'm attacking banks and they're evil and they're dark and the exclusion part comes down to a lack of education, or there's a better term, financial literacy.
Yeah.
And that is the fault of the banks.
Why is it the fault of the banks, though?
Because banks use terminology that's relative to banks.
Right, but are the banks responsible for education?
Absolutely. So banks have a responsibility to ensure we understand the products and services we're buying from them, and that we understand their role in the facilitation of that, and the risks and rewards that come our way. I mean, a lot of people don't even understand the basic functions of a bank. How do banks make money? If they don't charge me for my bank account, so how do they make money? Yeah. So it's so complicated, and you can blame the marketing team in banks, because I would put my finger on so many different teams within banks, and this is historic. This is not something that's new. This has happened over the years and years and years.
Yeah.
That we are so fixated in acquisition of customer, we will do anything to acquire that customer. We will say anything, and we will sometimes, communication's clear. Loan at this rate, okay, credit card at that rate, but who understands what's the annual rate of inflation? APRs versus compound interests, and what does that actually mean, and how does that work for me or against me? Or when you take when you look at a mortgage, your first 5 or 10 years of that mortgage, you're paying off next to nothing of the capital, and everything is an interest payment. You don't realize how all this works, or how can I help you again, grow your money.
Right. What about educational institutions?
Well, it's
curriculums.
It's hand in hand. It's hand in hand for sure.
Yeah, they would be, I guess, the ones, right, that could support.
When we're talking about consumer services, banks are the ones that sell those consumer services. The ability to add up and take away, that's the responsibility of educational institutions. Yeah. I know how to add, I know how to subtract, I know how to divide, and so on and so on. And you do learn the basis of what is the concept of compound interest and all these kind of things when you're going through your education, from whatever age to whatever age.
Do you think it's there's a certain age where you should learn about financial literacy, or what age is too early?
I don't think any age is too early. I mean, look at today, when I talk about how our children are adopting digital currencies, you just have to look at what they're doing online.
Yeah.
I cannot tell you how much money I've spent on Roblox, where my children are building houses, and they're doing value exchange with their friends and family.
I hope.
Well, as responsibly as I know, I would hope so. But they are, and they have a card. So they have my 2 daughters have a debit card that they can go and use.
Yeah.
And they ask questions. How much do I have on the card? How much can I pay? What is this? What is that? And they went through an amazing learning experience. One day they were like, they got some money for their birthday.
Yeah.
Went to the store, and I said, you know how much you have? Go and choose what you want. And they filled their basket beyond anything. And when they got to the till, it was 4 times more than what they had in there. And they had to learn to take things out. And then they realized, that's the price. That's what it means. Yeah. And that's at the absolute, baseline of learning.
Yeah.
But when they do that online, they have they seem to have a lot more understanding and comfort with the transactions they're making with their friends than they did with what they were doing in store.
Yeah. They're very attentive online. They're becoming much more attentive. Look, so we covered plenty. I'm going through the list that we've put together, that we discussed, and I can, I know also it's getting a little bit late. Don't wanna get bad stares tomorrow.
From who?
You know,
No,
you don't know. I don't know. Maybe if you don't get enough sleep, you know.
If you want to carry on, we can carry on. I don't mind. But if there's anything you want to kind of dig deeper into, I mean, are you getting the content that you're?
Yeah, I think we covered plenty. I think there are still a couple questions, maybe 2 questions that are still interesting, I would say, for us to cover.
Okay.
I would say one of them is, what do you predict for the future, or what will the future of money look like in the next 5, 10, 20 years?
Mm-hmm.
You don't have to answer all of them. You could pick one, whichever one you feel would be more interesting. I would say 20 years obviously would be
the long view.
Yeah,
Okay.
the long view, but I think 10. I think the rate that we're moving, 5, 10 also is interesting as well.
So you can stage it, because we know it's effectively a technology decision. As technology becomes more and more available and more adopted, it's forcing the new way of money. Okay, so I would say that over the next 5 years, you're going to see a far more rapid release of CBDCs.
Yeah.
Okay, governments are going to want to roll them out. You've got the Europe, the I think digital euro is coming quite soon. We've got success stories out there, the digital yen. I think there's also the sand dollar, which is in the Caribbean. I can't remember which country it was actually that released the sand dollar, which is quite an interesting one. Bahamas. Yeah. You've got the e-krona in Sweden. Yeah. So these are really starting to come out. And the e-dirham as well, the digital dirham is out. And as I said, that's actually under a program called the FIT, which is the Financial Infrastructure Transformation Program. That's being run by the bank right now. Yeah. So I think you're going to see a lot more rollout, which is going to, and I don't use this word as negative, but force regulation. Yeah. So it's going to start to really regulate what's happening within the digital currency world. Yeah. Okay. And I think we'll start to see a very clear line between decentralized versus centralized. And the question I would have, which I cannot answer right now, is can you play in both, or would you have to be in one or the other? Right. Yeah, that's a very interesting play to see what's going to happen there.
Yeah, but what would it mean? What would it mean from a user perspective? So this rollout
of CBDCs?
Yeah. What does it mean
I'll tell you that there's like 8 or 9
perspective,
8 or 9 value propositions, okay? Yeah. And it's like you've got enhanced payment systems is one thing. So e-wallets that are going to become norm across everything. So you will always have access to some money. Okay. Yeah, that's one thing. So access to wealth. Imagine I'm going to always be able to unlock value for you. I'll give you a great example. Okay, a great example. Why do we get paid monthly? Question.
Why do we get paid monthly? That's a great question.
Yeah.
Because maybe historically it would take that much time to analyze whether you've earned your salary or not. I'm saying it.
No, I mean, there's no right or wrong answer, but it's effectively nobody quite knows why we get paid monthly, because the US is bi-weekly. Some countries it's weekly. In a lot of third world countries it's daily. Yeah. Okay. But why should it not be? Why should I not choose when my money is released to me? Because if I worked a day, I have earned a day's earnings, a day's salary. Right. And so why can I not say to my company, I would like to take the day that I've earned today paid to me, please?
Because you need to declare your
No, people will say, well, it's in taxation countries, so it's very hard to work out for tax purposes. Right. Here in the UAE, we don't know. I mean, a lot of the time it's companies keep hold of the money on a monthly basis because they're obviously accruing interest. Right. Yeah, on that money in some forms. So
on a monthly basis.
Yeah. So the change in the game is that it's my money. I would like my money now, please. So the ability to have what I call money momentum, releasing money to me as and when I need it, because I've earned the right to money is a great change in dynamic that we were likely to see happening over the next few years. Right. As a kind of a small use case example there. We should see an increase in financial inclusion as well. So inclusion will become more widely available because of the fact that the telco infrastructure is allowing people to have access to something that allows them to get paid. So inclusion of that payment comes in.
Right.
And when you look at fintechs and so on, everybody's playing in this space. Telcos today are called techcos rather than telcos. Everybody's adopting this kind of tech first and a way of working, a way of thinking. Whoever has the most data will win this kind of race and has the biggest opportunity to unlock inclusion, in my opinion. It's also around modernization of monetary policy. Okay, so it's a really important thing. CBDCs are forcing central banks and banks to become more modern, more, let's stay with the let's stay at pace rather than always be behind the curve. Let's be ahead of the curve, be ahead of what people want rather than be behind it and feel like we're the ones holding back the horses. They're also looking at how they can compete with the decentralized. So crypto is it's a competition to crypto in a way. And I think it's also about maintaining sovereignty. Think about, we talk about language defining culture. And if you let go of your core language, you're letting go of a large proportion of your culture. Passports and currencies are almost hand in hand. So when the euro was launched across Europe, there was such ill feeling because countries gave up a component of their sovereignty. The French franc or the Italian lira or the German Deutschmark and things like this. It's all gone. That was part of a history.
Right.
And I think you can regain that through ensuring that you own the direction of wherever your currency is going next. So these are like some of these kind of topics and use case scenarios of where people are moving and why banks have to rapidly adopt central, the CBDCs.
Yeah.
And the risk on the other side, always think of the risk. Central banks have never played such a role in the financial market before. So they are now creating a currency that they are taking ownership of and will distribute to banks.
Right.
So they're going to have a far greater role to play with banks.
Right.
And there is a discussion around whether banks are going to be at risk because of this move. So there's an interesting playoff between the bank and the central bank.
Risk? Do you mean the central banks will play a more consumer-facing role?
Well, that is what the fear was initially.
Yeah, or if the currency is,
Yeah, but central banks have never been set up to deal with consumers.
Right.
So this is why there was a little bit of a, whoa, hold on. So you're forcing a currency that you are going to be the ones effectively owning the private chain, the private blockchain, and all the kind of leisure is going to be owned by the central bank and then distributed to the banks, when right now it's the other way around. The banks register everything else and then distribute that back to the central bank.
Right.
So the role of the central bank is becoming a lot more powerful in the role of money in the future.
I can name a friend or two that would find this a little bit. I need to be careful how I choose my words now. But I mean, what I want to say, I was gonna say scary, but what I want to really say is, a lot of people are big fan of decentralization, right? So and they're big advocates for that I guess element of digital currency, or what some digital currencies offer today. I wonder what it would take to bring them to the other side, right? Maybe a kick-ass marketing campaign by Digitas.
Bring it on. We're already working on it now. It's I don't know if it needs to be either or. It goes back to what we said earlier. One or the other or both.
Yeah.
I don't know right now.
Right.
I think the world has fundamentally changed because of the adoption at the pace it has been, this rapid adoption of cryptocurrency across the world.
Yeah.
And I think the returns, when good, are beyond anything anybody could have dreamed of.
Right.
The losses, when bad, are worse than anything else anybody could have ever thought of.
Right.
We haven't hit that level of stability, that break points that people understand in terms of what's the upper point and the lower points. To really start to understand it and get to it. And because of the design of the system, maybe we never will. And that's the beauty and the beast of the system in itself.
Right. No one's undermining cryptocurrencies.
Not
I mean,
at
look
all.
at what it brought. It brought the CBDCs, right? So,
And it's all change is good change. I really believe that. And whilst I said at the beginning and throughout this, everything I'm saying is not an attack on banks. Are an absolute critical part of the global economy, the local economy, the macro and the micro economy. They stimulate, they grow, they do everything. I think it's just over time, sometimes they became so big, they believe that they're too big to fail.
right.
And I think the idea of this decentralized world, is more, we want to take back control.
Right.
Go back to the start when it was the barter system, back in the, like thousands of years ago, we would barter on the value. Why should someone else tell us the value of the exchange between you and me?
Exactly.
And we know behind all of this, and we won't get into this, there's over the years, and I'm talking hundreds of years, the amount of politics behind money. It's not a clean, straightforward system.
Right. No.
There are power families that own so many different systems and can influence it. You talk about famous economists, the likes of John Maynard Keynes, who talks about the fact that governments can influence free market economies and so on and so on. And you see that today. We have a problem. We release more money into the system. Inflation goes up. We'll take money back out then. And it's all this kind of so I think this rebellion that's going on within the financial, ecosystem is very healthy. Very.
It's very healthy, and it's great for the consumer as well.
If they can simplify,
right?
Please simplify it so we start to understand it and we can adopt it more.
Understood. Great. Look, I think we've had a great episode. We've reached the end of the show. Any parting words? Any shout outs?
Shout outs, no. Just it's been really interesting, actually. Thank you very much for some extremely thought-provoking questions. The answers may not make sequential sense,
right?
But I think when you look at it as a whole, I mean, we've covered on so many things, and a lot of it's today is it's opinion. We looked at some history, we looked at some future. It's just great to kind of bounce ideas around and not necessarily come out with answers. But
I'll tell you what, we'll ask our listeners, we'll ask the viewers and the listeners to share in the comment section if there's any particular topic that they've picked up on that they would like you to cover more extensively.
With pleasure.
In the future.
In
the near future, hopefully.
Absolutely, with pleasure. And I have some very, let's say, interesting people who could come along and contribute to such a conversation. So really make it a fiery conversation.
Fantastic. I look forward to that. Thank you,
very
Kareem.
much.
Appreciate it. Thank you.